Joe mentioned, I'm with the Small Business Administration, the Sacramento District Office. My name's Carrie Ellinwood. I'm not familiar with this particular setup with this slide program, so give me a little forgiveness there. I'll probably do something silly. What I want to work with you today is to talk to you about what it takes to get financing, kind of what the bankers are looking for. I also have more information on the different SBA loan programs that I'm going to share with you. So Joe kind of went through it, the 50,000-foot high level, quick, go through the program. I'm going to give you a sheet that if you, I'll take a couple over these ladies, that will help you so you can kind of have a really in-depth understanding of what we're doing at the SBA. So the first thing I like to do when I have these presentations is I like to find out a little bit about you so I can tailor what we're going to talk about today to what your needs are. So I have 3 things that I need from each of you. The first thing is your name. The second thing is, are you in business? Are you a startup or thinking of business? And the third thing is, when you decided to come to this class today, what was the one thing that you were hoping to learn? Okay? And I'm going to take notes so that it's easier for me to remember and make sure I cover all your questions. So if I could start with you ladies. Okay.
What was the next one?
Are you in business or a startup?
We're looking to start our business.
Okay. What kind of business?
Like a cafe, bagel shop.
Okay. My handwriting's terrible, but I can read it, so you guys will be good. And then what was the one thing you hope to learn coming to this class today?
Basically, when we go to get our loan, what the banks are looking for.
Okay. What you need to qualify?
I'm just in general, like, just a lot of stuff where we don't really know that much about.
Okay.
We just want to take all the classes we can get.
Okay, good. So what's the process, right?
Yeah.
Okay, great.
And my name is Courtney. You kind of just segue me out there. Pretty much those are all my answers.
Okay. So you're going to be partners?
Yeah.
Okay.
And I pretty much just came to learn the same thing, and like someone had mentioned earlier, equity and getting a loan and
Okay.
you know the ins and outs. I want to
Okay.
do it right.
Good, good.
Just coming to get as much information as possible.
Okay, perfect. Thank you. Okay. Ladies?
Terry.
RRI? Why? Okay. Okay, we'll go with Terry then.
Basically the same thing they're here for. You know, one to
Startup or
startup.
your startup? Okay.
Information, what's available for financing is a big problem for a startup.
Mm-hmm.
I'm kind of interested in a restaurant,
Okay.
which is kind of, everyone calls it risky.
It is.
But I have some really good people that work for me that know the business. I was a waitress for 25 years, so it's not like I'm just going in there not knowing anything.
Okay, great. All right.
Finance.
Okay.
I have no idea how much it costs, start it up.
Okay. Good. All right.
And Melissa?
Okay.
And we had an acupuncture wellness center, and we are not a startup.
How long have you been in business?
Close to 20 years, however, we've been in this county a year and a half.
Okay. Okay. And what was the question, like the biggest question?
And the basic question would be about the, I guess it's the 504 loan.
Okay.
The business has always rented commercial space,
Okay.
so moving to being able to buy it.
Okay. Can you give me an idea, if you know, what the cost of the property that you would be interested in purchasing would be?
It would be maybe 125 to
Okay.
150.
Okay. Okay. All right, great. Okay, so those are the things that we're going to focus on today. I am usually, when I teach this class, you're going to kind of feel like maybe you got everything delivered via fire hose. I apologize in advance, but it's a lot for us to cover, and I want to make sure that I give you the things that you want. So part of the way that I like to do it is if we're talking about something and something comes to mind and you have a question, ask me. Because if you're anything like I am, you might forget it by the time I get done talking. So please just, let me know, hey, I have a question, and you can ask me or write it down if you're more comfortable and you want a little one-on-one afterwards. We'll try and schedule about 15 minutes for some of that as well. I know that you all have been through a disaster with the fire, and I just want to commend you for coming and being here today to make your business better and to keep your county growing strong. So I really appreciate that, and I'm glad we were able to come join you and give you some more information to help you with that. Okay, so as Joe said, we have 5-pronged mission at the SBA. We want to help you have access to capital, counseling and training, the contracting, disaster, and small business advocacy, which is something that comes out of Washington. I'm not going to spend a lot of time on this, but I usually just bring it up. If there's something that you had a question about, I'd be happy to answer it. So he talked about we guarantee the loan. We only do direct loans through disaster. And most banks, the community banks or the big national banks like Wells and US and Chase Bank, have an SBA lending division. And there's 3 things that those bankers want to know when you're looking for your small business loan. I'm going to talk more in detail about those. And our programs, again, as Joe mentioned, and I handed this sheet out to you, our main program is our 7A loan, which is basically, there's a lot of varieties of 7A in here. It talks about community advantage, talks about express loans. They're basically all under the 7A program. 504 is the real estate acquisition and economic development program, and then the microloans. So we're going to focus on kind of the nuts and bolts of these different products so that you're going to feel really comfortable when you go talk to the lender. And I encourage you to take the time, if you have a bank you like right now as an individual, get to know their business banker there. Let them get to know you a little bit, because right now in the banking industry, what the lenders are really looking at is that two-way relationship. So from a bank's perspective, you're not only going to borrow from them, but they're going to want your deposits too. There was a time back in the early 2000s where lenders were handing out lines of credit to businesses like they were candy. It's not like that anymore. We went through the economic recession, and businesses have really had to tighten their belts, and lenders are a business as well. They've suffered losses as well in their portfolio, so they're kind of in the same boat as everyone else. So they run their bank just like you're going to run your small business. They want to make a profit, okay? As Joe said, our loans are for profits only in the 7A market in the arena. And what they want to look at is good character. And what we mean by good character is this individual credit worthy? What's your personal credit like? When you go into small business as a startup, which is a bank looks at a startup as anything less than 2 years, they're going to look at you like a startup, and they're going to first thing they're going to look at is going to be your personal credit. Where do you stand when you get a bill? Do you pay it on time? Have you defaulted on anything? That's what they're going to look for. Management expertise. This is an area where a lot of small business owners, like you mentioned, you kind of need to learn all that stuff. You do, and that's where our SBDC can help you with getting you set up on your bookkeeping. They'll teach you QuickBooks, other programs like that. They want to see that you know how to run a business. So if you're managing your personal finances well, that's going to be to your credit. Let's say maybe you haven't been in business before, but you were a volunteer at a YMCA and you kind of took care of getting the kids all in the classes and getting all that kind of stuff done. Or maybe you worked as a volunteer on a fairground project for FFA students with their animals. Things like that. You can list that as, I have management experience. I've worked with people. I know how to get things done. Reasonable personal contribution or business equity. there is not a bank out there that's going to loan you 100% to start a business, okay? That's the bad news of the day. But reasonable is in the typical banking arena for a startup, they're going to look for 25 to 35% of your own capital investment. Now, let's say you have existing equipment that you've already purchased. You have money you've put towards licensing and things like that. The bank will give you credit for those things that you've put into your business already, but they're not going to loan 100%, okay? And that's probably one of the biggest eye-openers for people looking at starting a business. You'll need to work with our SBDC so they can help you understand, you know, the marketing side of it, the projections and cash flows. If you're all into doing things yourself and like to do research, if you go to the state website, if you go to, wrong pen, yikes. If you go to the website ca.gov, so it's ca.gov, they have a ton of information about your county, your average income in your county. Household income is going to affect your business plan. The different industries that are located in your county, all by counties in the state. Really wealth of information there for your business plan, and you just look it up by statistics. Go to California State Statistics, and it'll take you into each county, and it'll give you an idea. For example, let's say you lived up in Modoc County, and you were going to open up a retail boutique with fancy, fancy custom clothes and jewelry. We all kind of know in Modoc there's lots of trees, right? Probably not a lot of people that are going to be running around wanting to have fancy clothes and fancy jewelry necessarily, because they're more rural community like yours, a little more down to earth, a little more local kind of people. So you may not want to open it there. You may want to say, geez, I'm going to take this down to San Francisco because there's a lot of people down there that would be interested in that kind of thing. You're looking at the demographics in those two markets. So if you're looking to open restaurants, I think you're in a great place. I actually got married in Angels Camp and came here for my honeymoon and then an anniversary and loved it. You know, the little old downtown thing. It was great. Mm-hmm.
Contribution, like my son went to chef school, went on blue, would that be part of
You would have,
contribution? I mean, he has a school loan that he has to pay on that.
well, then they would be looking at him to cash flow somewhere to pay that. But it is part of his expertise and his management expertise. So that's where they would credit it. They may not credit you back for that cost of that education. Yeah, yeah.
Just on like the licensing fees, do you happen to just know like a number off the top of your head?
Because we're the federal agency and licensing is at city or county level, I really don't. But generally, I can tell you you would go to the county. What you would do is you'd ask them what's it cost to get a business license, what are any additional state requirements for food industry. There's specific state requirements. So you would kind of start at your county level, look into the business licensing, what are the requirements, then you'd go to the state and you'd look into those licensing requirements, and or if you're dealing with food, there's a whole course that's available through the state on food handling and preparation, as well as those, I can't think of the name, the kitchens where you can collaboratively cook so you can provide food for people. It's called a something kitchen. But if you look on the state website, you'll find all the food industry licensing and requirements. You're welcome. No, that's a good question. That's perfect. It's a good question. I can't give you the exact answer, but I can tell you where to go to look for an answer. So, $100? Okay, so Calaveras County, thank you.
So then that leads me to my next question. Have you ever had companies where maybe they like not semi-open up, but they like kind of get started and then get a loan? Because like the equity thing, like, you know, you're looking at us and we
Yeah.
don't have a huge house that we
Right.
put under equity. We don't have nice cars to put under that. You know?
Right.
So I'm just kind of like,
So here's what a lot of startups that are starting out where they don't have that bundle of cash set aside necessarily. A lot of the times what startups will do in that situation is they'll keep another job. And that will help the lender to say, okay, they've got their personal resources, their personal living expenses taken care of with this part-time job, and then they're going to probably work more than part-time on their new business, but that'll allow them to pay their bills so that they can continue to put money into their business. Okay? Yeah. You're welcome. Okay, feasible business plan. I touched on that briefly. That's where our SBDC is your tax dollars at work. You can go meet with Nate or the advisor here. I don't remember her name, but she works in this county, the lady in the red sweater. She will sit down with Judy. Trudy, okay. She'll sit down with you at no cost to you and help you put that plan together. They're not going to write it for you. They're going to help you put it together. The other resource you have, if you go to sba.gov, there's a ton of information there, and it has a template. So you sign up for your account. It's your personal little account on the SBA website, and it basically walks you through what you need to have in your business plan. So you want to have your mission, you want to have, what's our goal, who's our market, what kind of financial projections do you need to make. A good place to get that kind of stuff is the website for the census. You know where they come around and they knock on the door, and how many people live in your house? Okay, they also have a lot of market data, census, sun.gov. Okay, so they have a great resource there for you, similar to the county information the state has, but it's by industry. So it'll say you want to be a restaurant in this size of a community, this is the typical revenue for that restaurant. That's how you're going to build your cash flow projections. Okay? They don't really go into helping you with pricing and such, but you could probably just do your own secret shopper. I was doing a class one time, and this young man was in the class, and he said, well, I'm starting this barbecued sandwich business, and I said, oh, that's great. And we started talking about research, and he said, well, actually what I did was I went and sat in the competition. And I ordered myself a sandwich, and I saw what people, I was within registered distance, and I heard what people were ordering and what their average ticket size was. And he found out it was about $8.50. So he knew that if he were opening a restaurant in that market in similar food industry, an idea of what he could project his actual revenue to be. Okay, so there's a lot of ways to get that information. Sometimes if you're in let's say a saturated market, you're going to have to come up with something that makes you a little bit different. What can I do to set myself aside? Maybe you'll deliver the bagels, or maybe you'll have that gourmet farm to fork restaurant, things like that, right? So you want to think about things that are going to make you stand out from your competition. Okay, collateral if available. We've been talking a little bit about how much money they want. So you're going to need to put your cash flow projections together in order to figure out how much you're going to have to bring into the game. Okay, so why I asked you how much is a building here, because I'm not familiar with real estate prices, and so you told me, between $125,000 to $150,000. Well, we're going to talk a little bit about 504, because that means you'd only have to come up with 10% of that amount. Okay, so that's where you'll figure out how much money am I going to have. A lot of businesses start with funds from their family that might want to participate, some friends that might want to put a little money into the business. Lots of different ways to get it. Most small startup micro businesses, we call them, if your revenues are under $100,000 a year, are going to probably get started with either a microloan from one of our partners or friends, family, people that believe in you and want to help you get going. And then ability to repay the loan from cash flow. This is the one thing in this market right now with the banks, is they're looking at pretty much cash flow. If you have a bunch of real estate, that's good. They get to tag onto it and take it if you fail. But really they're going to say, is she making enough money to pay her personal bills and to cover all the expenses of the business? Okay? So that's where it's real important you take the time to do that market research and figure out what's the average sale for a bagel shop in our area. What's the average restaurant? How many restaurants are there? Is there room in this market for me? I think you're probably one of the very few acupuncturists up here.
Yes.
So you know that you have a market that you don't have a lot of competition in?
No.
Okay. So she's in a good position in that regard, right? Okay, good. All right, so those are some of the questions. Okay, the 504 loan program. I don't know how to go back. I'm going to go back. I don't know how to go back. Okay, on the 7A, I mentioned character. One of the things with SBA lending is because our program is funded with taxpayer dollars for that portion of the loan, you need to have not had a loss to the federal government in the past. So if you have an unpaid student loan, if you're making payments, you're good. If you're not making your payments, not good. They won't give you another guaranteed loan, okay? If you have outstanding back taxes and you're not on a payment plan, guarantee program's not going to work for you. Payroll taxes, federal taxes, personal taxes, whatever it is. So that is part of that character thing. On the 7A loans, they're guaranteed for anywhere from 75 to 90%. And all of this is on this sheet, but I just kind of want to give you an overview of that. And as Joe mentioned earlier, if your loan's for $150,000 or less for a 7A loan, then there's no SBA guarantee fee. Because it's like an insurance for the bank, but the borrower pays anywhere from 2 3/4 to up to 2 3/4. So 2% to 2 3/4 on those loans. So that's a fee. We call it kind of pay to play. So you're helping also to cover part of that guarantee of the 75 to 90%. If it's $150,000 or less, you the borrower don't pay that fee. You may have a fee from the bank for loan packaging. You may have a fee from the bank for a real estate appraisal, that kind of thing, but there's no guarantee fee on 150 or less, and that will run through September 30th of 2016. Okay? So this is an important piece of 7A I didn't want to forget telling you. Okay, for the 504 loan program, this is where we call it economic development and also helps you get into real estate when you don't have that 25 or 35% down on that $150,000 piece of property, right? So the way the 504 works, and I like to draw a picture because it kind of makes it a little easier to understand, and I didn't draw my 7A picture, but so can you all see this? You got this? Okay. So for 7A loans, I like to talk about it like this with a picture. Here's the commercial banker. I've been in business 10 years. I have positive cash flow, good employee structure, going good, in my market, everything's good. Wonderful, the banker says. You're in my box, and boy, I want to knock on your door and make you a loan. Well, then, here comes our startup. I'm a startup. I've been in business less than 2 years. I have a really great idea, but I don't have a track record with this business. And the bank says, wow, I like the idea, but you don't fit in my box. What can I do? And then he says, hey, there's an SBA guarantee. It gives me 75% to 90%. I can take that risk. I can expand my credit box so that new startup business can fit into my credit box now. So we sort of, I envision it as SBA helps that banker to open up their eyes a little bit, look at some new trending things, new ideas, and loan to startup businesses. Because in our economy, that's where 90% of the jobs come from, are the startup businesses. Don't know if you knew that. So that's kind of the 7A picture that I like to draw for people. Now for 504, when you get ready to purchase your building, you think you're ready, you want to have a restaurant building or your bagel shop building. The way the 504 works is it's long-term, so it's 25 years. You're going to have 2 loans that you're paying on, and it sort of looks like this. The bank right here has 50%. This is a separate note. You're going to negotiate that directly with whatever lender you decide to go with, okay? So 50% of your loan. Then 40, and this isn't to scale, 40% is going to be the SBA debenture. This rate is set at the time your loan, your transaction closes. And you can see the historical marketing. It's also managed by a CDC, and the gentleman in the lunch meeting that mentioned that he got a loan, and they came and asked him how many jobs he had, and they followed up with him. So for every $65,000, they're going to want you to create or retain 1 full-time equivalent job. Okay, so you could have 2 part-time people to make up that one full-time equivalent. You don't have to hire only full-time people. That would be your 40% loan from the SBA debenture. And then down here at the bottom is your 10%. Okay? So if you have, I'm going to just use $100,000 because it makes math easy for me. If you have a $100,000 loan, your banker's going to be in first position with $50,000. The SBA is going to be in second position with $40,000, and you're going to come in with $10,000. Okay? So that's how that's all going to flow out. The caveat again is for every $65,000, you need to create or retain one job. You also need to have 51% owner occupied. All of the SBA guaranteed loans are for small businesses that are active businesses. Like you couldn't go out and buy a rental house and use that with an SBA loan. That wouldn't work for us. We want you to be in a hotel, a retail, anything like that would work. If you have heavy machinery and equipment, like maybe you need a coffee roaster that costs, $6,500, $65,000 or $100,000, big pieces of equipment, you can use 504s. You can't use them for working capital or anything like that. You could get, as long as you stay under that $5 million amount that Joe mentioned, you could get your 504 for your $100,000. And then if you qualify with your cash flow, you could get another $50,000, let's say, for your working capital or inventory or things like that. All of this is predicated on that business plan I mentioned earlier, and you're qualifying with the projected cash flows for your startup business. Okay? So if you go to that census.gov, it's going to give you a pretty good idea what's my revenue opportunity, what can I show my cash flow, what's the usual profit margin on that type of a business. Okay? So that's how the 504 works. Did you have any more questions about that particular one?
No, that's really clear. I think I understand.
Okay, good. All right, great. Okay. Okay, microloan. Now, this is a really great program that SBA, what we do is we fund what we call an intermediary. So this is going to be a not-for-profit organization. It could be a CDC organization. It just kind of depends. A lot of times counties and cities within their economic development agency may have a microloan program. So that might be a place for you to look if you're looking for a little smaller loan. They may have that up here. If they don't, I've got a couple, once I go through this, other places that you might look. So those only go to $50,000. They have less paperwork and they're a little faster turnaround than the SBA guaranteed program because the lenders do the package of the loan, then they submit it to us and all that stuff, government stuff. They go up to 6 years to repay, and then they also give you what we call technical assistance or business management assistance. So they'll have someone from that nonprofit come out and maybe help you figure out the bookkeeping piece of it. Or they'll check in with you and say, do you need help with this or that? The SBDC is also available to you for that kind of ongoing counseling at no cost. And this is at no cost. And then the interest rate, they have a range. They can go up to 6% higher than whatever they're borrowing the money from SBA from. Typically, those interest rates are higher than the SBA 7A, which is usually anywhere from 2 3/4 to 4 3/4 over prime, because most of them are doing variable rate because they're just not willing to set a fixed rate. This one can go up higher, like 9%, maybe even 10%, depending on the factors of your business. But you negotiate that with the microlender. Let's see if I have the. So we've kind of talked about the different programs, and we talked a little bit about where you start. I mentioned your bank relationship. You want to go with someone who knows you personally or in your business if you're in business already, someone that you have a history with, because a lot of the times that banker is going to have to, what we call, say, go to bat for you. Let's say you're looking for a loan and the guy has a limit. In the bigger banks, what they do is they give a branch manager a limit that they can loan without taking it up the credit chain, so to speak. So you may be at US Bank or Chase Bank or Wells Fargo Bank, and that branch manager that knows you and that you deal with all the time, they could probably lend you $50,000 to $100,000 without running it up the flagpole, okay? So that's a good place to start. You know them, they know you, you have a history there. If your bank says no to you, try to go in there with the thickest skin you have, because as Joe mentioned, they have different appetites for loans. They may have too many real estate loans. They may have too many restaurants on the books. They may have too many, car dealerships on the books. So it's not personal. That bank, sometimes I'll say, if you don't have a bank you bank with now and you're looking for a relationship, tell them what your business is and say, are you interested in this kind of loan? Because if they're not, you can save both of you guys a lot of time with filling out paperwork, okay? If you're not ready, again, SBDC can help you, SCORE organization can help you. Probably your women's networking group would be a great place for you all to get involved with so that you can have supportive people around you that are like-minded, interested in business and that kind of thing. Okay, what about grants? We always have this question, so we have to put the slide out there. Do you do grants? The answer is they're not grants for for-profit business. There was a few years back, California had some grants for women-owned businesses through the state, but I don't think they have those funds available any longer. Grants, usually that SBA talks about grants, we're talking about a not-for-profit organization that's providing services, or we're talking about a community, a municipality. They have things called CDBG grant funds where they may be revitalizing a downtown district and they'll grant money to that business if they open there to fix up the facade. That's kind of where the grant, as far as the grants go. And we talked about that. Any questions? So this is the part where I want to make sure that I went through your questions. We still have time to have conversations if you want to have one-on-one conversations. There's a lot to know and to think about before you start your own business. I've tried to kind of cover the high-level stuff, but let's see if we covered your questions today. Okay, so what's a bank looking for and what's the process? I didn't really go over the process. So let's say you're looking for the process. What do we need to expect? Well, first you want to have your 2 years of your personal returns if you're not in business, 2 to 3 years of business returns if you are in business. You want to go in there with your business plan. We talked a lot about putting that together and having a use of proceeds letter. So you would go in with your business plan that says everything you're going to do. And on top of that would be a cover letter that says, I'm opening my bagel shop and I need $50,000 so that I can purchase some inventory, some equipment, a refrigerator, that kind of stuff. Line it out for them so they know what you're going to do with the money you borrow. One of the real important things you don't want to ever say to a banker is, I want a cushion. I want some cushion money. They don't go for that. So you have a plan for those proceeds. If you want to have that working capital, would be the cash that you want to set aside so you can purchase inventory or things.
And that's pretty much like you itemize that in your business plan, what you're planning. Like
yes.
If you're in your business plan, you're going to pretend, so to speak, that you already got the money
yes.
and what you're going to do with it, right?
Right, and you're going to show, you can look on our chart there and see if you borrowed how much money, what would my rate be, and what would my monthly payment be on those termed out loans. So, and as the gal from USDA mentioned, they do what they call blended rates. So if you have some that's working capital, some that's equipment, the terms are different. So you might get a blended rate out of it. Just pick the one that you have the most of the funding for and use that to figure out what your monthly payment's going to be. Okay? That's the nice thing about the 7A loan program is a typical commercial loan may only go to about 5 years, and they're either going to want to restructure it or have you have it paid off. The SBA loans, if you're getting working capital, that's 7 years. Equipment goes to 10 years. Real estate goes to 25 years. So if you want to do a 7A loan and you have that 25% down to purchase real estate, you can use a 7A for that. But if you're doing the economic development side where you know you're going to create jobs and you want to have that lower deposit of 10%, then you can use the 504. So once you have all those things together, you're pretty much set. Kind of maybe role play between the two of you, what you're going to say to the banker, have your 2-minute elevator speech, go in and talk with your banker. Okay, so that's kind of how that process Qualifying, if you're not in business and they're going off your personal, they're going to look at your credit score, basically. You can go to that Credit Karma at no cost and find out what your credit score is. You also may want to go to one of the credit reporting agencies and ask for your annual free credit information report. They don't give you your score, but they'll show you everything that's on your credit report. And that's important because sometimes they make mistakes and you have other people's, for example, this happened to me. My father had a loan and we have the same initials, CL, and my last name was the same. So his stuff was showing up on my credit report. What the heck? So I had to get that straightened out. You know, no, that's that social, this is my social. So that may take a little work, and the SBDC can help you with that, or SCORE can help you with that. But you just have to get those things cleaned up. It's good to know ahead of time if there's something on there that doesn't belong. Let's say you've had a challenge in your credit over the past 5 years. You know, there's been so many people that have had to do, you know, let the bank take their home back, have a, you know, short sale. It's fairly common. If you had that 3 years or more prior to looking for a loan, the banker's going to be able to set that aside because they're aware of what all of us went through with that economic slowdown that we had. Okay? So 3 years of good credit, and if you had major medical or a situation come up that is out of the ordinary that caused you to have some additional credit problems, just let them know. Be upfront with them. Say, you know, my husband, my daughter had a medical problem. You know, we're on a payment plan with the hospital, but I took a hit on my credit because I was trying to take care of her and couldn't work full time. Whatever it is, just let them know. They're much better now than they were a few years ago because they're starting to realize how many people were impacted by those kind of situations. Okay? Okay, information on loans and restaurant. Restaurants are, and your bagel shop, are one of probably the most challenging things to get financing for because they typically have a higher failure rate than some other businesses. So, doesn't mean you can't be successful, especially when you have experience and you put your plan together first. But that's one you're going to may have to shop around at the banks, because go in and tell them what your industry is, what you're doing, they may or may not be interested. But that doesn't mean you can't get financing, okay? A little tougher. We talked about your 20 years of business, a year and a half here. They're going to be looking mostly at your year and a half here. So they're going to look at you more like a startup. On the 504 program, typically it's for businesses that have been in business 2 years or longer, but they will look at you in this kind of situation because you have the experience and the past history of doing the business. So that would be one that you would probably be okay with. I would recommend actually, we have 2 CDCs that are fairly active in this area. One is CDC Small Business, and the other one is, I think it's Small Business Capital. Marcia is her name. Call me at that number and I'll get you the name of the other one, because they have different areas that they're more active or not so active in. Okay, so I think we covered everything. Is there anything else that comes to mind that you would want to know?
I just had a quick question.
Sure.
About the grants, and you know, that wasn't really my thing, but I'm just thinking, you know, there's so many women from America that, you know, and like the girls here, you know, they're trying to start something, and a lot of times they're not going to have the capital. I was wondering, are they going to be revising the grant program? And I also have other older women friends that I know that maybe are a little bit disabled, not quite all on their game. They're in their 50s or 60s, but they still want to work and have a business. I was wondering, are they going to be having something like that for women next year maybe, or?
I haven't heard that, but in your area for the microlenders, and I think I had to use a different setup here. We have in Sacramento proper, we have 2 microlenders that are active, but they're not active in your area. In this area, the ones, I have it on my notes here, that I would need to recommend you to take a look at One of them is, let's see. Sorry about this. I want to make sure we get the... Okay, one of them is opportunityfund.org.
Okay.
They do the smaller microloans, and they're active in your area. And the other one is Kiva, Kiva.org, and they're active in your area as well. And the other thing that we didn't really touch on here, and I kind of want to bring it up since we're talking about more rural and smaller area and possible loans, is there's a lot of online lending. You hear about crowdfunding and different online opportunities where you go out and GoFundMe, things like that. They're not regulated. So when you do that, you need to pay real close attention to what they're offering you and how they're offering it. And by not regulated, I mean the lenders have certain laws they have to comply with. They can't charge you over a certain amount of interest. It's called usury interest. They can't do that. The online lending not being monitored like that has caused some sites to make it sound like they're making you a fair interest rate. But if you look at the interest rate they're charging you and you annualize it, it can be like 40%. So if they say for 3 months we'll charge 10% interest on this for 3 months, well then the next 3 months it's not paid off, it's another 10% interest. You see what I'm saying? So you want to be careful if you're dealing with online lenders that aren't in that regulated space of banks and credit unions and that kind of thing.
And so, I don't know a lot about loans, obviously. What if we, not crowdfunded, but let's say we got our family and we pooled all our money and we had, let's say, $10,000 that we were like, we're going to put it towards our business. Do we go to the bank with that and say we want to put this down on a loan, or do we keep that in our own honey hole, go get a loan privately? Like, I don't know if that.
You could use that as your cash investment for your small business, the funds that you raise from family. But what I would encourage you to do is if you are borrowing from friends or family, make a note up for yourself. Go online, do a small business note or a loan so that you're taken seriously. And that you have something to say, I'm committed to repaying this loan to you, even though you're my mother or my brother or my sister. I think I see a lot of the probably biggest challenges for the micro businesses is when you do that and you don't do the paperwork to go with it, then you have expectations, unspoken expectations. Maybe you have an unspoken expectation of a 2% interest rate and they're expecting 6%. It's really, really important, especially with friends and family, to get it all on paper and sign up with it and know what it is. Same thing with partners. If you're going to have partners, talk about it ahead of time. I'm going to be the person who goes out and buys all the food and makes all the food, and you're going to be the one who serves the food. And those are our roles and responsibilities. And I'm going to handle the books, and you're going to handle the marketing. Divvy that all up before you get started, so you have it all on paper and everybody is on the same page of who's doing what and how they're doing it, because that's where people get themselves into problem with partnerships. And the other thing I forgot to mention, which I usually do, when you're starting your small business, you want to make sure there's a few legs on your stool that you want to have. One of them is you want to have a good insurance agent, right? You want to make sure you cover your business liability insurance, your insurance on your property, all those kind of things. We've talked about the banker a lot. That is one of your legs on your stool that you want to make sure you have that developed. The other one you want to have is an attorney, just in case, and or if you're becoming an LLC or a corporation, you're going to need an attorney or an accountant. So your 4 legs there: banker, insurance, attorney, and accountant. The biggest thing that we see coming into our office when a business gets themselves in trouble is they haven't paid their business taxes correctly to the state. And if you're selling retail and they're going to charge taxes and they're going to want that money, if you have employees and you're taking money out of their checks, you make sure you set that aside in a separate account, because you're going to be in trouble if you don't. So this is what I see. They'll have their business going, and they'll go, oh, well, I was making $100,000 a year, but they weren't putting aside their employee taxes. So all of a sudden, they come to us and they go, well, I can't pay my employees federal taxes and state taxes and unemployment taxes because they weren't setting that money aside in a separate account. So I find the simplest way to encourage small businesses to make sure they don't spend that money on a really great deal on a refrigerator is to put it in a totally separate account for tax savings. Okay? That way you know that you're covered with those bills that really it isn't your money. And the other thing, a little tip would be, what you want to do is make sure that you understand your business plan really well and you understand your business finances. Because if you go to a banker and you say, oh, well, I had a consultant write my business plan, and you can't answer his questions, that's not going to be good for you. So it's real important that you know where you are financially with that business, you know, once a month, every 2 weeks, every week, whatever it takes. My husband has a small construction business, and every Friday he has his bookkeeper come in and they sit down and they go over the bills and the things that got paid and the things that are due and how much money came in, all that.
Does your husband use QuickBooks?
He does, actually.
So do you know like a percentage off the top of your head of how many small businesses use QuickBooks?
I don't know a percentage off the top of my head, but I do know it's the most popular in the market.
Just because my in-laws, I work for them, they own a small construction business, and I've been learning QuickBooks.
Oh, good. It's
QuickBooks definitely helpful with like the tax thing, right?
Yep, they have a thing on there that'll do all the payroll tax stuff, all the state taxes, everything. Yeah, you know, unless you have a real good handle on finance stuff, you want to have either a bookkeeper or somebody helping you with that piece of it, because that's where, you know, you're a professional in what you're doing and you don't have that other expertise, and that's the last thing that you end up doing. I have a friend who has her own business, and we were talking the same thing, and she goes, I know, I finally got a bookkeeper. I've been trying to do it myself, and I just never do it until the last minute. I have to file extensions on my taxes. And I said, you're really good at what you do, but you want to make sure you take care of those books.
It's
So.
a lot of work. I'm doing the bookkeeping at my business, and as well as I'm doing reception and management, and and it's just, the bookkeeping, yes, and it's so important to stay up on those details. But you're literally chasing down receipts all the time, and like I said, whether you're logging it in QuickBooks or another program or doing it by hand, it doesn't get there by osmosis.
Yeah.
And I feel like the bookkeeping part, people, I'm always like, make sure I get that receipt. And you're watching and you're kind of like the little, I don't know, they see you coming and they're like, uh-oh, what does she want?
Right.
It's not the most popular position.
No, it's
so
not.
important. Yeah.
It is. And even if you just literally get a shoebox and you put all the receipts in there and give it to your bookkeeper once a month, or the, check.
I'd be so mad if someone gave me a whole box of receipts.
That's good, yeah. Yeah. Okay, so that's all I have. Is there anything else that comes to mind that you have a question about?
How does an LLC, do you know much about LLCs, how they work?
Well, I'm not licensed, so unfortunately I can't give you a lot of information about that.
Invest, and then they get
Um,
after it.
It's actually what it is. It's a limited liability corporation. It's a way you structure something to limit your liability. And beyond that, I really can't go. But if you go to Sacramento Score, so spell out Sacramento and then a period and then score, SCORE.org. They have an online where you can either meet in person, or you can have a telephone conversation, or online conversation via email. But they have individuals that volunteer their time that are attorneys and CPAs, and they can answer all those kind of questions for you. They won't, because we're not licensed to do that, they don't want us to go too far into that arena, but you certainly can get that assistance at SCORE. Okay, any other questions? Okay. Oh, good. Yay. Very good. Thank you. Very good.
What if I had a bankruptcy like 5 years ago, and all that real estate
Right.
fell apart and all that?
If you're 5 years out of it and you're rebuilding your credit and you're being current now, then you're fine. You're fine. Usually if it's 3 years or more, they pretty much say, okay, we know why that happened.
Because that would have come up a lot, I'm sure.
It has. In 2008, we literally had people calling the district office. They were small businesses and they had lines of credit and they were thinking they could purchase inventory and such. And the bankers were cutting off those lines of credit. And they were crying because I ordered this inventory, now I can't pay for it because they reduced my line of credit. So yeah, a lot of that went on. A lot of people. But 5 years out, you should be good. Any more questions? Okay, all right. You're welcome. Please make sure you take time to stop by our SBDC table out there. Yay, very good.
Are credit unions better doing business loans, small business loans?
Some of the credit unions do. Golden One is not interested in our program or business loans. Safe Credit Union is. First U.S. Community Credit Union is.
Golden One is left in Jackson, and then we have Central State Credit Union in San Andreas.
I haven't heard of them, but San Andreas would be out of my district, so I wouldn't know if there's a credit union down there doing them. Travis is. I'm trying to think of all the ones. First U.S. Safe, Travis, YOLO Federal Credit Union, but they're county, so that wouldn't be one you could use. Sometimes if you have another home now, they might give you a home equity loan and kind of not say it's a business loan and then still give you the loan. You could use the proceeds for whatever you want. But typically, Golden One, and we've approached them and talked with them because they're in my district. They are everywhere. They're the largest one. Yeah, they don't have an interest yet in doing the business section. Yeah, so. Wells Fargo is the top lender in our district. Mm-hmm. And they're doing a lot of the smaller size loans too. Okay. You're welcome. Thank you.